Hi, still right there. Welcome to Empower Rangers Forex Weekly Forex Review for 26th of May 2014. Allow me to share with you my screen. Just hang on for a second. Here we go. So this is for 26th of May, and although this is US Memorial Day, the Forex market will still be open. We do expect, however, that the US session will be quite quiet, but that's okay. Monday, typically nothing much will happen. Before I start, especially for the new subscribers, I'm going to flash you 4-part disclaimer. I will remain silent, and please go through this. All right, so essentially we are here giving you our insight of the forex market. We are not giving any form of investment advice, and we have there are opportunities available, and we are quite, I will consider quite fortunate, shall we say that, because we pick up the cross that we were looking at a short, and we have some on that cross. So at the end of the presentation, I'm going to show you our result for last week. So each week we are looking at a couple of things. One is to look at the forex fundamentals, and then looking at the red flag events for the upcoming week, futures traders COT report, FX technicals via our currency chart matrix, have a peep of the channel breakout and swing trading ideas, and that's all we have for each week. So let's focus on the FX fundamentals. There's a little bit shift of the strongest currency this week because, as you may be aware, for the existing subscribers, quite strong for the last few weeks, and suddenly, because of a variety of various events, Aussie dollars became one of the weakest currencies for this week. Let's look at the MPM minutes. This is the Australian one, and essentially the Aussie Central Bank says they remain cautious about the Aussie economy. They are still thinking that the Aussie dollars remain expensive. And what is more interesting is that just prior to the issue of this RBA minutes, S&P actually came out and said RBA. Sorry, let me rephrase it. S&P actually came out and said that AAA rating for Australia might be in danger. So overall, the sentiment for Aussie dollars remain quite weak. Unfortunately, and therefore we are looking at potential short of Aussie dollars in the upcoming week. And then we move on to China. China, we have the HSBC Flash Manufacturing PMI. This is the preliminary reading. The market expected 48.4. And good news is the market was wrong. The number came out to be 49.7, which is just 0.3 below the 50 dividing line. If we were to think about Aussie dollars might benefit from this currency, to be honest with you, there was a little bit short-term lifting of the Aussie dollars against US. It was the gain was wiped out very fast within a few hours, if I remember correctly. It seems that the Aussie dollars are still very much weighed by the domestic news, not so much on the Chinese economy. And then we move on to Europe. We have a few news coming out. We have German month's President Whiteman's speech, followed by the Flash Manufacturing PMI for Germany, France, and Eurozone as a whole. Friday, we have the German IFO business climate. So Weizmann, the German Bund's central, actually said that Draghi shouldn't provide any easings in the month of June. He is actually one of those skeptics whereby he's unsure if the ECB's proposed easing in June might benefit the Eurozone economy. Keep in mind that he is the leader of Germany, and Germany historically has been one of those countries whereby is not in favor of all this easing, because to German, it says that Eurozone problems is caused by other countries within the Eurozone. It's not so much about Germany. So as a result, you will say, well, who really cares what he said? Okay, who really cares what he said? But that being said, final call, we will know the verdict in the first week of June because Draghi is going to announce the easing, if any, in the month of June. So right now there might be still noises around this month. Germany. Let's look at the German's data. The services PMI with manufacturing PMI came out. The services PMI actually rose from 56.4 to 54.7. The manufacturing PMI, however, dropped from 54.1 to 52.9. In any case, both numbers are still above 50. For Eurozone, the service PMI rose from 53.1 to 53.5. The manufacturing PMI, however, dropped from 53.4 to 52.5. Yep, it's still above the 50% mark. But for France, the manufacturing PMI dropped to 49.3. So the sentiment of Eurozone is that ECB is still, it seems the ECB is still go ahead. It will still be going ahead with the proposed easing. You can say that the euro dollar has been priced in this proposed easing. If you were to think of euro dollar dropping further against US dollars, think twice. Maybe the bottom has been found. You can see that for the last few trading days, euro dollar has been quite firm around the 1.3650 level. It might suggest that the pricing has already, the euro dollar has already priced in the proposed easing of the ECB. So fundamentally speaking, I'm not so bearish on euro dollar. I would say that it is still a neutral / bearish currency. The German IFO business climate dropped from, let me recall, it is the okay, it doesn't say here, but if you go back to Forex Factory here, Forex Factory is 111.2 last month, dropped to 110.4. So the Aussie dollars, not Aussie dollars, the euro dollar actually was adversely affected by this piece of news. Okay, so euro dollar actually dropped to 3-month low, but still is around 1.365 level. For the UK, something that we are quite interested about is the inflation rate, because if this is very close to 2%, BOE might then have no choice but to accelerate the time frame for raising interest rate. And who knows, the number came out to be 1.8% in April. So it's pretty close to 2%, the 2% mandate. So as a result, the pound dollar pair was strong at the beginning of the week. Okay, so this is something that we noticed. And then what is even more interesting is that the minutes of the BOE meeting 2 weeks ago said there are more evidence of slack reducing before raising rates. So what they want to see is more evidence for the rate hike. So this minutes basically reflected the fact that more and more members of the BOE are looking at possible rate hike, yet they have not agreed with the time frame. So we still need to look at some data from the UK to confirm that, well, as soon as more and more members have firmed up the time frame, then perhaps the rate hike story will come back quickly. Otherwise, you know what, the rate hike is still a market speculation. In terms of the COT report, the commitments of traders report, the futures traders are still on a net long position thinking the rate hike will happen. Okay, so this is what the market expectation is versus what will actually happen in the forex market. So be careful with that. For retail sales, you will notice that it was up by 1.3%. That was the April's number. That was the highest since May 2004. Wow. So that is to show that the data is good. Finally, what is the so-called stopper is the fact that the Q1 GDP second estimate came out to be 0.8%. The market was a little bit disappointed with this. So some bulls took advantage of clearing the long position, and as a result, the 1.7 story on pound dollar didn't happen this week. In fact, it was dropped below 1.69 and even 1.68. So it will still take some time for pound dollar to come back. That's my prognosis. I need some more UK data to see if there's any reason to long British pound. Meanwhile, what we are seeing is that pound is still a buy, but not a very strong buy. So be careful with that. $433K, which is the largest rise in 6 months' time. And see, the housing market was doing good, the labor market is no good. So the story that I talked about last week remained the same. The Fed is still going according to the schedule for the taper. However, as to when the interest rate hike will happen, it remains to be seen. Finally, in Canada, we have the retail sales as well as the CPI. The retail sales actually dropped 0.1% in March, and this is against the market expectation. And the decline is not a major surprise because there was a drop in the employment last month. And also yesterday we have got the CPI. CPI surprisingly rose 1.5% in the month of April. Core CPI rose 1.4%. These two numbers are on a YOY basis. Well, it's pretty close to 2%, by the way. And BOC might have to hold back on this rate cut talk. Okay, inflation rate is up. So as a result, towards the end of the week, CAD became one of the strongest currencies to buy. Will the sentiment carry through next week? Perhaps. So I've updated the fundamental views. And one thing that I would like to mention is CAD. I'm not saying neutral / bearish anymore because of the inflation rate. I just want to put it back to a neutral currency, which means that we will look at the technical to decide whether we want to buy the CAD. Okay, so I've updated the fundamentals. So take a look and see whether it makes sense to you. And now we are going to the red flag events for next week. Next week, obviously Monday, as you know, is the US Memorial Day. It's going to be quiet. And then we have got Australia private capital expenditure Q2, expecting a negative number, by the way. New Zealand, we have the trade balance, which is quite important, and ANZ business confidence. And then on Japanese yen, we have Kuroda making a speech on Wednesday. For Eurozone, we have the elections. Okay, if you go back to the fundamental views, I have actually summarized the elections details. So check it out. That will happen on Sunday. And then we have Draghi making speeches once, not twice, not once, not twice, but 3 times. Okay, so Draghi will be quite busy at the beginning of the week. So pay attention to euro dollar. For UK, nothing. Then we have USA, the core durable goods order, and then prelim GDP for Q2, and then initial jobless claim, prelim GDP for Q1. And then we have the initial jobless claim and pending home sales. Finally, in Canada, it is the monthly GDP. So it's considered a light reporting week. Currency chart matrix suggested that the crosses are in action. We have a few yen crosses who are also two yen crosses are in action as well. But otherwise, the rest you can see is a pretty volatile pairs and currency crosses. In terms of the currency chart matrix, suggesting that the Aussie Kiwi are weak, pound and CAD are strong. Okay, so let's look at the futures traders. What happened is that the futures traders became more bearish in euro. So it becomes a net short position again. For pound, it is a net long, more bullish. Aussie, the futures traders are still more bullish on Aussie, but less bullish in Kiwi. We then have the more bearish case for CAD, less bullish case for Swiss franc, less bearish for Japanese yen. For gold and silver, there's still a divergence, more bullish in gold, less bullish in silver. So these are the charts for you to see. So I'm going through them. I'm flashing them very quickly. In terms of the US dollars index, Nikkei 225, S&P 500, first of all, you can see that the 4-hourly chart for US dollars index, it has already come up to another high this week. So like I said last week, I'm looking for a US dollar strong case, which is true, as you can see. In terms of the Nikkei, there was a very strong snapback after touching the 101 level. And there was, if you look at the technical outlook, there was actually on a daily chart a very, very nice hammer. And therefore, Nikkei 225, boom, boom, boom. And as a result, dollar-yen pair also make back. So meanwhile, Nikkei 225 is on the way up. So perhaps dollar-yen may go up as well. For S&P 500, we have made an intraday all-time high on Friday. Intraday all-time high on Friday. Actually, if you look at the other chart provider, S&P 500 gave us an all-time high on close basis as well, because it closed 1900 point something. So that means the risk, it is still a risk-on position in the market. Okay, it's still in a risk-on position in the US equity market. For the channel breakout, what we see was we have got some breakout already. You can see, fundamentally speaking, basically euro pound, euro CAD, euro dollar make a 55-day low, and then euro dollars opposite, which is dollar Swissy, make a 55-day high. Unfortunately, because it's so euro dollar centric, I am not so keen to open new position using channel breakout. Fundamentally, it's not a bit right. It doesn't sound right. So let's look at the swing trading ideas we have found. We said we will go. It's not long. I thought I forgot to change that. Now I'm using Hangout to do it, so I can change the slides on the spot. Okay, so it's actually a short on pound, short on pound yen, short on euro CAD. Okay, so you can see that pound yen, because of the weakness in yen, there wasn't any swing high formation, so pound yen had no opportunity. And then for euro CAD, wow, finally we have more opportunity on Friday, because after Thursday close, euro CAD went into a swing high position. So we went in 58 pips of profit on Friday's position. So yes, we were profitable this week. Swiss franc, CAD Swissy weekly chart. Well, we are about to be stopped out very soon, but let's see what it does. Because once we have set a stop loss, we'll just keep it set and forget it, because we have a stop loss. For new swing trading ideas, this is what I want to do. I'm looking at a short on Euro Kiwi as well as a short on Pound CAD. Okay, I could have short Euro CAD, but since we need to look at Kiwi, so I wanted to short Euro Kiwi, short Pound CAD. Now I'm going to switch back. I'm going to switch back to the original mode, which is stop loss 100, because the market is now quite volatile. So I want to make sure that we don't want to set, we do not set a very high stop loss, and therefore a further away TP. So what I want to do is that TP1, 100 pips of profit, TP2, 200 pips of profit, stop loss set at 100. I think we are still okay. So let me change back to the original way of doing things and see whether we will be stopped out unnecessarily. Of course, we don't want. And if we feel that this set is not doing good for us, then yes, then I'll go back to the ATR mode. Meanwhile, let's see how it goes. Okay, so that's all for this week. I'm going to do the options trading hangout, global equity and futures market review. If I can't do it, finish it tonight, rest assured I will do it tomorrow night. Okay, so thank you for watching. This is Jack Wong here, and let me come back to you my face. Okay, so essentially, hope you enjoyed this video, and I hope you also like to put some comments, say something about whether you prefer this handout format, because the video can be uploaded pretty fast. Okay, I'll see you next week. This is Jack Wong signing off now. Bye bye.